Now, around 7 years ago when I first started dividend growth investing, I was a huge fan of higher yielding stocks and ETFs because I thought that was the quickest, fastest way to reach financial freedom, because logically speaking, the more a stock or ETF pays in dividends, the better, right? Now, of course, over time, I learned that just because a stock or ETF has a high dividend yield does not necessarily make it a good investment whatsoever. Although over the last 7 years or so of my investing journey, I definitely have found some super high quality, high yield names that I absolutely love to have a part of my portfolio. Now, in this video, we're going to go through 3 different high yield dividend stocks that pretty much offer all the good and none of the bad when it comes to picking the perfect high yielding asset. Now, if you're interested in dividends or high yield investments, make sure to stick around, drop a like down below, and let's get into the first one. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first high yield stock that I absolutely adore, this single stock has done so well for me since I first started buying it several years ago. I'm talking about ticker symbol EPD, or Enterprise Products Partners. Now, it says right here on Simply Safe Dividends, since the creation in 1968 as a simple wholesale marketer of natural gas liquids, or NGLs, Enterprise Product Partners has grown into one of America's largest midstream master limited partnerships that services both producers and consumers of NGLs, natural gas, crude and refined products, and petrochemicals. The MLP services include everything needed to get raw fossil fuels from the producer's wellhead to the end consumer in a ready-to-use state. More specifically, this process involves gathering, treating, processing, storage, and transportation. So the industry that EPD is a part of is energy, oil and gas storage, and transportation, which generally speaking, when it comes to energy, you can find some higher yielding offerings. But sometimes with energy, I found that there seems to be a lack of consistency unless you pick some of the top names within an industry. Now, some of the highlights of EPD, and we'll go a little bit deeper into this one in a second here, but EPD is currently offering around a 7.63% forward dividend yield, which is absolutely massive, especially when I show you the dividend growth. As far as dividend safety goes, the dividend safety is 65, which makes EPD one of the very few 7% plus yielders across all the stocks that have over a 60 on the safe score. Now, even though EPD does offer a well above 7% starting yield, the dividend growth is also pretty significant, and since I've owned shares of EPD for several years now, I've been through plenty of dividend raises at this point. Another thing I love about EPD is that it's very low beta at 0.36. This stock doesn't move around that much, it's pretty boring, but the way that I look at it is EPD yields well above 7%, it trades mostly sideways, slightly up, and it has some pretty fast dividend growth, which makes EPD a big pillar in my portfolio. Another one of my all-time favorites is Main Street Capital, or ticker symbol MAIN. Now, the outlook on Main, it says, founded in Texas during the mid-1990s, Main Street Capital is a business development company, or BDC, and most BDCs in our coverage maintain speculative dividend safety scores reflecting their inherent risks of this business model in general. Now, business development companies primarily provide debt and equity capital to relatively small, high-levered companies that can't access traditional financing from banks. Now, like Simply Safe Dividends said, some BDCs are a little bit risky because of the inherent business model, but Main Street Capital has been extremely consistent since the start. And the fact that Main Street Capital offers a well above 6% starting yield, has a little bit of dividend growth, but actually a relatively very safe dividend, especially because of how much this one yields right off the bat. Now, on top of that, Main Street Capital also is a monthly paying dividend stock, which I'm naturally a huge fan of because the faster I can get cash into my cash balance of my portfolios, and the faster I can buy more shares of different stocks for ETFs is definitely a win to me. Main Street Capital also is a relatively low beta stock, so it's not really going to whipsaw your portfolio all that much. It's pretty boring, but very consistent, just of that of EPD. Now, the last and final high yield single stock, and that's my second largest position throughout my entire 7-figure portfolio, is ticker symbol O, or Realty Income. Now, it's honestly kind of crazy that I can even add Realty Income in this video as one of my favorite high yielders, but the fact that Realty Income is yielding around 6% at this point, it is considered high yield. Now, Realty Income is of course yielding so high as of currently because interest rates are still a little bit higher than preferred, so there is a little bit of risk going into the REIT sector, of course. But Realty Income does have a very safe dividend, which they've been paying for several years now on a monthly basis, and also Realty Income does have some dividend growth, although it is a little bit on the slower end. Now, finally, Realty Income also has a low beta, and that's just another one of the reasons on why I love having so much Realty Income in my portfolio. Now, I personally am a huge fan of real estate because it offers the potential to grow over time, but also the cash flow associated with real estate and the consistent monthly payouts especially when we're talking high quality real estate, has historically been pretty good. Now, of course, I could have taken that money and bought real estate on my own, which I also have done. I do own some physical real estate also, but Realty Income owns 13,200 different commercial properties, leased to over 1,300 different clients, which means it's going to be much more diversified than anything that I can afford, obviously. Now, Realty Income's top 10 industries are also what I would like to call pretty recession-proof areas. Things like grocery stores, convenience stores, dollar stores, drugstores make up the majority of Realty Income's portfolio, which in my opinion means that even if there is some sort of recession or another economic downturn, I think for the most part, Realty Income's portfolio will fare just well. Also, looking at Realty Income's client diversification, this is another reason why I've been so bullish on this REIT over the past decade. Things like Walgreens, Dollar General, Dollar Tree, then companies like 7-Eleven, Walmart, CVS, etc. Again, a lot of these clients are what I would like to consider sort of recession proof, meaning that once again, if the economy is doing well, if the economy is doing bad, for the most part at least, Realty Income will continue to get their rent checks sent to them consistently. Now, I thought it'd be kind of interesting to stack up Realty Income, Enterprise Products, and Main Street Capital and look at how their performance has been over several different time frames. So we're going to use total return as the metric, so this is dividends plus price return included. So even though at this point I showcased all three of these high-yielding single stocks, and I definitely at least sort of gave some good reasons on why I'm a big fan of them, looking at each one of these names first off on the year-to-date time frame, Realty Income is down 9% plus, which again, because of interest rates, Realty Income along with pretty much all the REITs have been getting clobbered. Now, EPD is up 3.23%, and Main Street Capital is up almost 5%, and this is all year to date. Now, on the 1 year time frame, a little bit longer, Realty Income is still down 17.4%. Realty Income has been a good buying opportunity for quite a while now, at least in my point of view. EPD is up 7.9%, not all that bad, and Main Street Capital is crushing it, up 23.47%. Now, on the 3 year time frame, Realty Income is basically flat. Yes, Realty Income has not had a great last 3, 4, 5 years, but again, Realty Income long term, in my opinion, and of course I could be wrong, is still going to recover quite nicely. But EPD over the last 3 years, 54.3%, amazing. Main Street Capital, 62.88% on the last 3 years. All super high yield, and 2 of them in the last 3 years have performed amazing. Now lastly, on the 5 year time frame, Realty Income is still down in the red, EPD almost 40%, and Main Street Capital almost 71%. So as you can see, at least Main Street Capital and EPD have checked out quite nicely over the last 5 years on almost every single time frame, where Realty Income, at least for me personally, is definitely more of a recovery play, but we're going to have to see what happens. So there we have it. Those are 3 of my all-time favorite high-yielding single stocks that I'm currently still adding more of in every single one of those names pretty consistently on a weekly basis as of right now. Now in my portfolio currently, I have almost 2,850 shares of Realty Income. I also have a ton of Enterprise Products, 740 shares, and then Main Street Capital, I have a smaller position, but still 231 shares, which I'm going to probably hold on to forever. But when it comes to higher yielding single stocks in your portfolio or maybe on your radar, now I want to hear from you guys down below. What is your number one favorite high yielding single stock that you just can't stop buying? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.